Hi, I'm Kevin O'Reilly, and this is the briefing from Emerging Trajectories. For people who don't know you, how would you describe what you do? I'm a trading, sales, and banking executive with over 25 years' experience in the global commodity and capital markets. I advise on commodity trading and sales operations, risk management processes, front office staff management, investment and trading strategies, as well as corporate hedging programs. Recently, I've also helped businesses embrace the energy transition, better understand carbon markets, and navigate the commercial, compliance, and operational risks inherent in their trading operations. What was your very first trade and what did it teach you? I started work as a silver trader or a silver options trader for a famous metals house in the mid 1990s. The first trade I did, or one of my first trades, was delta hedging the option book portfolio. And what did I learn? Well, if you're delta hedging, you have to buy and sell the delta, which is um, a, a long or short position, which the aggregate book presents to you. And it is through market movement and the management of that position that you can either capture the premium of an option you've sold or make up for the time decay that your book is costing you. So it's a very sort of active and role that requires a lot of concentration, but the actual application is very simple. You simply buy and sell. So basically, I started doing this, and I think what I learned was that markets do move, and markets really don't often behave the way that your supposedly well thought out, rational, in-depth analysis suggests. And perhaps the most important thing is that victories are short-lived. When information is flooding in, how do you cut through the noise and make a clear decision? It's important to try and process as much data as possible, and there is more data than ever before. But through time, practice, and patience, it becomes a lot easier to cut out even quite blaringly noisy signals and focus on things that do make sense. And those things typically are important headlines for important organizations or events that affect a market at a fundamental level, and similarly, important data points regarding the volume and nature of participants in a market. When a trade goes against you, what does that feel like, and what's your first move after? Well, like most people, you don't feel too good or happy. However, the best traders, of which I'm not one of them, usually remain impassive and simply recalculate what they need to recalculate, reassess what they need to reassess, and process any and all new information. Check their risk limits, whether it's a stop loss, partial or full, the implied slippage, so on and so forth, and then look for new data or existing data that they may have missed or did not assign sufficient probability weightings to, that may have actually affected the price of the market in a way different to they were expecting. Honestly, it's just discipline and a rigorous approach over time that will yield results for most traders. It's usually when people get knocked very quickly off their thought process and their behavior pattern at the beginning, when something doesn't go quite right and they sort of scramble to adjust early on. It's not to say you should sit there and just see how things play out, but the point of a risk limit is that there should be some leeway in that to give you enough time to determine, are you correct? Is this the right course of action? Or sometimes you just step in and say, whoa, got that wrong. And that's the end of that. What strategies do you use to manage the intensity of your work? You really can't operate for 100% of the time on full in an 8, 10, 12-hour trading day without a few breaks. So you need to take them. That can be standing in the sandwich line. That can be standing at the water cooler. You might be lucky enough to grab a few minutes, stretch your legs, walk around the trading floor, ask a trader in a different market what he's doing, what he's thinking, stare at some, news report that's not related to what you're doing. Or even if you get the chance, go outside, let the sun shine on your face, or stare out the window. Just a few minutes of total calm can absolutely reset you and bring you back down to earth so that when you go back up to the trading floor, sit at your desk again, your mind is a little clearer. What's the one part of your job that must always be done by a human, no matter how good the AI gets? The instincts of the commodity trader, which perceive and interpret mood, sentiment, and unspoken signals, are challenging to imitate. Similarly, genuine creativity and curation for quite some time will still require the human touch, which itself arises from emotional and not artificial intelligence, or at least not yet. Thanks for joining me for the briefing by Emerging Trajectories.